Welcome back, everybody. Today is Monday, and this is the time to take a look at the Bitcoin market. So, Sive Morten is here with the Forex Peace Army.com. So, as we said previously on the Thursday in particular, that actually the drop of the Bitcoin now is not surprising. It's just because Bitcoin market is very sensitive to the United States liquidity, domestic liquidity. And those of you who are tracking the liquidity situation, particularly the auctions of the new debt issues, amount of the borrowing by the Scott Bessent, you probably know that it's really big outflow of the liquidity. So the United States Treasury is taking off as much as it could, and it's not actually the end yet. So you know that the reverse repo source now is totally hosted, and the United States Treasury still needs to borrow on the debt market approximately 250 billion net. And also they would like to add cash to its TGA account with the Fed. They're trying to reach the 850 billions. Last week it was around 500 billion. So another 350 billions they need to add on the account. So this is really almost a half of the $1 trillion that might disappear from the market in the nearest couple of weeks, right to the point of the Fed meeting. And that, of course, make impact on Bitcoin market. That shows you how it is stable and explains why it's so bearish, because Bitcoin has very specific performance compared to other markets. So, but let's go step by step. First, starting on the monthly chart, picture mostly hasn't changed. So the August stand as inside month to the July, and here, at least on the long term, it's nothing to worry about. Yes, we have retracement, but the trend break-even point stands around 90,000. So, and this is more stressing upward swing. Here's even not the 30% pullback. From that standpoint of view, for the bullish long-term context, we would not see any hazard by far. Yes, normal retracement, but until the 90 even area, it's probably might be treated as retracement long-term bull trend. On the weekly chart, we already explained why for the mid-term and short-term perspective we're not happy with what we're seeing right now on the market, at least from the bullish point of view. Because this reversal is already talked about this, but just let's repeat it. It's not quite natural, because take a look on the swings of the market. Here we have a big acceleration. So fast action, market hits the 618 minor extension, shows retracement, and goes higher above this target, which is really good pace. That should be the continuation, and in general this should be an action to that major AB equals CD target. But this hasn't happened. Market stands in halfway, shows the wash and rinse of the previous top, showing inability and exhausting of the bullish power, and return right back down. So currently it stands, by the way, take a look that the weekly trend has turned bearish. So currently we have nominal bearish context on the market. And currently it stands at a very important area. So an area between somewhere around 108, 111 area, but I would even make it a bit wider. So from the 105 to the 108 probably. It's really important, because if market will drop below this area and returns back in this trading range, it will open road down to the 75, 80 area. So market will start floating in this range instead of that range. So that's why this level now seems very important. In currently a situation where market stands in the period of the liquidity drought, makes in place really bad game for Bitcoin performance. So let's see, it's a really big question whether it will find a lot of buyers to stand above this level. So on the daily chart, everything happens as we said. So we said market will start testing this support. Trend here is also stands bearish. Let's see what will happen around it. Currently is obviously not the situation for taking any new long position. And here's the first specific moment for Bitcoin. Take a look what the reaction on the Powell speech was, as on any other market, right? But what has happened in the weekend? Market totally has erased the Powell speech effect. So if you take a look, for example, on the Forex market, on the gold, on whatever, any market, you won't see this. You just will see that minor retracement starts, but this candle is still valid. Here, it's totally erased. Only strong support area probably prevent market from the deeper drop. So, what patterns we could recognize? Well, theoretically, it might be the double top, but its target stands significantly lower. So if you'll measure the distance, it will be around 102. The classical target stands here. If this pattern will work in this way and market drop to the 102, that will be the starting point of the big downside action, because in this case, take a look, you easily could get head and shoulders here on the daily chart with the neckline around 100, and it could mean the really collapse to the downside. So that's why many things depend on what will happen here. And the current points, it's a big question whether to take position with this double top aiming on the deep drop or not. Because if you take a look on lower time frames, you will see that here between this area we have some existence of the target, and also we have the strong confidence support. So mostly it depends on this area what will happen. If market will able to break it, 105.50, 108 area, then hand shoulders will be almost grounded. At the same time, it might be point for reversal and upward action. So that's currently the vital points and the core of all situation on the daily chart. What will happen around this area? On the full time frame chart, here is target of the potential double top. If you can see, it's around 101, even 102 area. And here is also some extensions from this most recent upward action. You can see the first extension down is 108.50. That probably might be considered as the nearest downside target if Bitcoin will keep going lower. On the hourly chart, you also could get the same level if you consider this type of action some kind of the butterfly or something. You can see that here we have 108 even. So 108, 150, it will be the downside target in the case of the breakout. What you can do in current circumstances? In general, if you're ready to take the, well, first of all, we're not considering taking any new longs because we have the bearish context. We do not see any signs of the reversal. We do not see any bullish patterns by far. And recent performance looks really weak on the market. So we're agreed on the direction to the downside. If you would like to take any position, you will have to sell in any scenario against this top, because, and it's Powell speech, because if market somehow returns that big up, taken out of this top and keep going higher, it hardly will be already treated as a double top, right? And will be start smelling like the failure of the pattern, suggesting probable upward continuation. So any bearish positions currently, on, at least on the short some charts, on the daily intraday charts, will have to be taken against this top. So if you would like to do this, probably it makes sense to consider maybe some pullbacks or something, because currently it's rather solid distance to your potential stop order where you will place it. Or you could try to find some very small patterns on intraday, such as the owl, butterfly or something. Maybe you will find other ways to place your stop here. So currently risk management for position taking is take the primary place, just because although you know the direction, it's not really an easy task to find the points where you could take the position with a proper stop and proper risk. And in the current points, I would probably wait for maybe some pullback or something, just could let you to find reasonable points with a reasonable risk. Currently standing at this neckline and with the target round 108, well, it seems not very attractive, and at this particular point for immediate position taking. Maybe it makes sense to wait and see what will happen.